Hello and welcome to today's Delta Credit Tip. So you've decided to get a job that requires a high security clearance, but you can't get the clearance because of your credit. What do you do? What are the criteria that they're looking for? How do you get past this obstacle? Well, stay tuned. We'll tell you how on today's Delta Credit Tip. Hello and welcome back to today's Delta Credit Tip. So you've decided to get a job that requires a high security clearance. It could be anything from a banking job to a military job, Department of Defense, Highway Patrol, maybe IT, where it's a high security clearance is required, but you can't get it because of your credit, right? Why is this an issue? Well, a lot of times if you are in a financial hardship, there's an inherent risk that you present as a result of that, right? You may find yourself being thought of as being a little desperate and willing to do those things like espionage or fraud or theft that others may not simply present because they're in a better financial position, okay? So there are certain criteria that security clearance companies have that you're going to want to pay attention to make sure that you're able to get this clearance. We get a lot of customers throughout the year who come to us for this very thing, and hopefully this information will help. Okay? If so, please take the time, subscribe below, hit the bell, right? Because every Thursday we're going to come to you with more information that you can find helpful to help you with this and other credit restoration issues you may have. Okay? Most importantly, share the information. Okay? There are other people in the same boat as you. This information can be very helpful to them. Pass it on so that we can all make a choice to make a change here at Delta. So, talking about that security clearance, there's actually certain guidelines well beyond just the financial requirements that you may find that are listed out in what they call guidelines, and it's A, B, C, D, E, F, G, F, and so on and so forth. Guideline F happens to be the financial guidelines, and there's really two categories of financial guidelines. Those that are disqualifying and those that they find just kind of like mitigating, right? Things that are not so bad, maybe they'll let you in, but then there's the definitive ones over here, you're a no-go, okay? So the first thing that they're gonna be looking for is your inability to satisfy your debts, okay? So if you've got a lot of accounts that have not been paid over the period of your life, really, they're going to not necessarily be so inclined to give you the security clearance. Also, indebtedness without the existing ability or at least pathway to pay off your debts. So let's say you've got an old charge-off account with Sprint or with the bank, right? If you don't have some sort of pathway in place to pay off those debts, even if they aren't necessarily paid off in full yet, they just like to see that there's a path that's in place that you've put in place to satisfy those debts, okay? And more than likely what you're going to want to do is you're going to want to have a history of payments kind of already in place to make that happen, okay? Now, speaking of a history of payments, if you have a history of old charge-off accounts, okay, even if they're beyond statutes of limitations, they don't like to see that, okay? So you can't have multiple accounts. If you've got maybe one, that might be an okay thing depending on the industry that you're in, but you definitely don't want to have multiple charge-off accounts because that's going to be a definitive no-no, okay? Also, any kind of history of deceptive financial practices, any kind of fraud, any kind of tax evasion, anything that could be construed negatively, like fraudulent applications on things, even writing letters to the bureaus disputing everything on your credit report, saying it's not mine, these are also red flags when it comes to security clearance companies that are trying to clear you for an employer, okay? Now, they're also going to pull your credit, and they're going to look at some of your financial ratios, okay? You don't want to have high debt to income and high debt to credit ratios. So your debt to income ratio is what are the payments on your debt that are on your credit report in relation to your income, okay? The other thing they're going to look for is your debt to credit ratio. You've heard us use these ratios a lot of times in a lot of our other videos, but that debt to credit ratio is the balance on your credit cards versus the limit on your credit cards. If you are maxed out on all your credit cards, you look as though you cannot handle your financial obligations, right? And you're leaning on the credit cards, but you cannot lean off of them. All right, so you're going to want to make sure that you pay down those credit cards. I would say pay them basically down to zero, right? Get them as far down as you possibly can so that you don't look as though you're choking yourself out financially and maybe sooner or later grasping at straws to get you out of this predicament, okay? If you are a gambler, stop it. Just stop, right? You don't need to have a big, huge account at the Hard Rock. Okay, and you want to make sure that you don't have a history of gambling, and more importantly, that any gambling you may have done in the past, all debts are settled, right? And your family isn't mad at you for it, because they're going to interview friends and family, and your gambling history is going to be part of those questions. So if you've got family problems or financial problems as a result of a gambling history that you may have, that's going to disqualify you, bar none, every single time, okay? Also, if you haven't filed your taxes, okay, whether they're business taxes or personal taxes, you're going to want to be current with those things. Now, all the things that we've mentioned so far are bad things that you may have, right? You know, not paying your taxes, having bad debts, having excessive debts, but having the unexplained affluence is just as bad, right? Because it could lead to things like fraud or crime or money laundering. You know, there's a lot of things. If you've got so much affluence without the ability to explain where that affluence came from, that could be just as bad. So make sure that any kind of income that you've got coming in or large assets that you have, that you're able to source those funds. Just like in a loan, right? If you go and try to get a mortgage and you've got $10,000 all of a sudden that pops up that you're going to use for your closing costs, well, that's kind of fishy, right? And they're going to want to source those funds and figure out, well, where did this affluence all of a sudden come from, okay? Now, those are all the disqualifying factors that are out there that'll just kind of slam the door on you, okay? There are what they call mitigating conditions under the qualifying F categories that may not necessarily get in the way, but they are going to kind of raise some red flags. And that's some of those behaviors that we already mentioned, but that are really, really, really old, okay? If they're like 10 years in the past, 15 years in the past, it won't be that big of an issue, but they still may require that you resolve some of those issues as well, right? Also, issues that may have been out of your control. Maybe it was because of a divorce or an illness or a loss in job or some kind of, you know, extraneous circumstances that that prevented you from being able to handle a financial obligation. Believe it or not, actually enrolling in programs like ours here at Delta Credit Restoration can actually be a big help, because sometimes just being in a position where you are seeking help with a counselor, a financial counselor, gets you through the process, okay? They'll at least give you the benefit of the doubt and not necessarily slam the door on you right away. So if you're in a position where you're seeking help from a company like Delta Credit Restoration, a lot of times a letter from us or from whatever consumer credit counseling agency or whatever that you're working with is sometimes enough to get you going. And the relationships that we create for you, in other words, the circumstances of repaying the debts, some sort of initiated good faith repayment plan, having something like that in place can sometimes also create what was a disqualifying condition into a mitigating condition going forward. Okay, so make sure that if you've got a company like ours that's helping you, that they can put together some sort of proof of enrollment so that that you can go forward. Also, if you've got anything like on your credit report or circumstance that has a good base of dispute, for instance, there's something on your credit report that doesn't belong to you, but you're fighting to try to get it off, or there are circumstances behind it. Sometimes, obviously, if it has nothing really to do with you, they're not going to necessarily hold it against you, and they'll consider that a mitigating condition. So, lots of information here. If you've got questions, put them below. We'll be more than happy to answer them. If you're going for that security clearance, good luck, right? But if luck isn't going to be enough for you, you need some help, give us a call. We'll be more than happy to help you out. And in the meantime, I hope this information helps. Again, thumbs up, hit the bell, share the information. And in the meantime, make the choice, make the change, Delta.